Alrighty, what's up guys? This is Taylor. It is Friday the 6th of January, and the market will close up here for the week in about 30 or so minutes. So, good news. The update to the Big 3 indicator is all done. I'm done tweaking it. I'm done playing with it. We are ready to rock. So the update should be pushed pretty soon, but pretty simple stuff, guys. A red bar is the sell signal, a gray bar is neutral, and a green bar. And to find a green bar on the S&Ps, we got to go under the hood. The green bar is the buy signal. So using the indicator, couple of observations heading into next week. So for starters, the pretty colors on the larger time frames, it's all pretty bearish. So we have sell signals on the weekly chart. We have sell signals on the daily chart. And now today we're getting the short squeeze. So your S&Ps are up about 2.5%. Pretty good pop-a-roo. But you'll notice here on the hourly chart, even though they ripped the thing from 3,800 towards 3,900, so just about a $100 move here, we don't have a buy signal. Right? The hourly chart is still neutral. So a lot of times you get a big move away from your 21 EMA, but you fail to print that buy signal. Usually it means that strength not going to be sustainable. In other words, you've got to get a pullback. The odds of it continuing to rip higher without a buy signal, they're pretty slim. So there's the observations as far as the indicator. We're bearish on the weekly chart. We are bearish on the daily chart. We are neutral on the 1 hour. And these little guys over here, these little shrimps, the 15 to 5, they're bullish. So the way I look at it is, your weekly chart and your daily chart, that's a gunfight. You're in a downtrend with a sell signal. So that's a gunfight. You got a nuclear bomb, you got a bazooka. These little buy signals, they're a step in the right direction. But on a 15-minute, a 5-minute, and a 3-minute, it's like a butter knife. You're showing up with 5-minute buy signals, trying to fight the good fight against sell signals on these larger time frames. So there's the observation on that end. Weekly chart is bearish. That's been the case for quite a while. The daily chart is bearish. The hourly chart is neutral. And you got a couple buy signals across lower time frames. Now, observation number 2, and it all kind of ties together here. Today's pop takes you into a couple different layers of major resistance, or levels that could be major resistance. The weekly 21 EMA, the daily 50 SMA, and on the hourly chart, we are pumping towards the hourly 200. Now, as far as the hourly 200 here, I want you guys to notice here, for the first time since like the fall, the hourly 200 is now sloping to the downside. So you've got a falling hourly 200, and we're popping into it here today. So here's my thinking as far as a potential trade for next week. What I'm going to look for here is whether or not the bulls can do two things. One, can they actually take the S&Ps above the hourly 200? And at the same time, can we actually print an hourly buy signal? If they fail to do that, either they can't rip it above the hourly 200, or they just fail to get a buy signal. Then what I'm going to look for on these lower time frames is signs of exhaustion. Meaning I want my 15-minute chart to go from green to gray, right, bullish to neutral, signs of exhaustion. I would look for the same thing on a 5-minute. I look for the same thing on a 3-minute. And then if they can actually turn bearish, we go from green to gray to red. What I would look for at that point is a short under the hourly 200. And as far as a downside target, here's the thing. These big pumps, especially without a buy signal, they're not sustainable because they take the market a country mile above the 21 EMA. So as my friend's mom would say, it's higher than a Georgia pine tree. That's what she used to say when we would come crawling out of the basement. So that's what I'm looking for, guys. Sell signals on the weekly, the daily, neutral on the hourly. They're ripping it towards a couple or a few different levels of major resistance. If the hourly chart can't break above the 200 SMA, and then I get the go-ahead for my lower time frames going neutral and bearish, then I'm going to look for a short early next week with stop back above the highs here, and the downside target could be as low as the 21 EMA. So there's one potential bearish idea. And I'll do my full market recap and give you guys the whole spiel on Sunday. But now a bearish idea And this kind of goes against what I've been telling you about Apple as of late, but you got to see things from both sides. So Apple here, bearish on the weekly chart. And we got a big old squeezer. We are bearish on the daily chart. We are neutral on the 1 hour. So very much like your S&Ps. And your lower time frames got a couple of them green beans. So Apple here, notice how this week we get the big flush under that key level of 130. And 130 is a huge level of support. And there's not too much here under the old girl until your weekly 200 around 115. So 130 is a pretty big level of support here. A lot of times retail traders, they're going to get short just because of a break of a key level. Wow, Apple broke 130. We're probably going to roll over from here. Now, sometimes that's going to work. Not always going to be that easy. That's why I'm a bigger fan of trying to short the rallies. So what I would look for a short-term bullish trade is if early next week, if the bulls can take and keep Apple back above 130, and if they can do that with a bunch of buy signals across these lower time frames, then I think they might have set a short-term bear trap. Break the key level of support, rope in all the shorts, and then you catch them with their pants down. So that could probably be a nice trade for a push towards 133, 135. Maybe grab some cheapy out-the-money calls. Now, bigger picture, guys. I am bearish on the market. I do think unless things change drastically, we could just continue to trend lower and lower. But in the short term, we've got to be prepared for anything. So if the market conks out early next week, under that hourly 200, and we get a couple of lower time frame sell signals, I'll look for a short for a flush down towards as low as the hourly 21, and I'll have my exit above the highs. If the market's pumping, I think you look for that bear trap in Apple above 130, try to play that back up towards 135-ish, and we'll take it from there, guys. So the indicator is done. For those of you that have the Big 3 indicator, as soon as the update gets pushed, you'll see that on your My Indicators page on Simpler. And for those of you who are interested in the indicator, you got the link in the description. But otherwise, guys, hope you have a good Friday. Be safe this weekend, and I'll talk to you on Sunday. Adios.